What if I told you that in 2025, you could sell a property, avoid capital gains taxes, wipe out your taxable rental income, and even eliminate future tax bills legally? If you are a real estate investor or small business owner, this video could save you tens of thousands of dollars this year alone. We are diving into the most powerful real estate tax strategies available in 2025, and they are as follows: 1031 exchanges, bonus depreciation, cost segregation studies, opportunity zones, and capital gains planning. These are not loopholes. They are written into the tax code, and if you are not using them, you are probably overpaying. Let's break it down step by step. Section 1. A 1031 exchange is a classic wealth building tool. The 1031 exchange is the holy grail of tax deferral in real estate. Named after Section 1031 of the Internal Revenue Code, it allows you to defer capital gains taxes when you sell an investment property, as long as you reinvest the proceeds into another like-kind property. Here is how it works. You sell a property. You have 45 days to identify a replacement property. You have 180 days to close on that property. You must use a qualified intermediary. They would put your money into an escrow account, and you can't touch that money. Real example. We helped a client sell a $1.1 million apartment building with $400,000 in gain. They rolled it into a $1.6 million multifamily property and deferred over $90,000 in taxes. Pro tip: you can keep rolling 1031 exchanges forward for decades, and when you pass the properties to your heirs, they get a step up in basis, erasing the tax burden. 2025. Watch out. Some legislative proposals have aimed to cap 1031 benefits above $500,000 in gains, but as of now, full exchanges are still available. Section 2. Bonus depreciation in 2025. Under the Tax Cuts and Jobs Act, real estate investors could claim 100% bonus depreciation on qualifying assets. But starting in 2023, it began to phase down. Here's where we are in 2025. Bonus depreciation is back at 100% for all assets placed in service after January 20th of 2025, which is good news. What qualifies? Personal property with a useful life of under 20 years. That includes appliances, carpet, HVAC, and land improvements. An investor bought a $750,000 fourplex. Using bonus depreciation, they wrote off $95,000 in year one and eliminated all of their rental income. If you're buying property in 2025, run a cost segregation study to identify what qualifies for bonus depreciation. Section 3. Cost segregation. Accelerate, don't wait. Cost segregation is the strategy that makes bonus depreciation work, so you can depreciate them faster. Typical property parts that qualify: flooring, cabinets, and countertops, exterior paving and landscaping, lighting, electrical, plumbing. Instead of 27.5 years, you get 5, 7, or 15 years to write off the assets. You can combine bonus depreciation with results from a cost segregation study. Case study. We helped a short-term rental investor in Arizona. She bought an $800,000 property. The cost segregation resulted in $210,000 in year one deductions. Result? Zero tax on rental income and even offset other passive income. Pro tip: only use IRS-approved firms that conduct engineering-based studies. Cookie-cutter reports don't hold up in audits. Section 4. Opportunity zones. With this strategy, you can eliminate future taxes. Opportunity zones were created under the Tax Cuts and Jobs Act to encourage investment in distressed areas. How it works: you invest capital gains into a qualified opportunity fund. You defer tax on the original gain until the end of 2026. Hold the investment 10 plus years. A client sold $500,000 in Amazon stock with a $250,000 gain. Instead of paying 23.8% in tax, they invested in an Opportunity Zone multifamily fund. They deferred taxes on the stock and will pay nothing on future gains. Deadlines. To qualify for full deferral, you must invest your gains within 180 days of sale. The deferral ends December 31st, 2026. Ideal for long-term investors, those exiting crypto or stock gains, and anyone wanting to make an impact while building wealth. The Opportunity Zone program isn't just a tax break, it is a long-term wealth-building vehicle that aligns capital with purpose. It rewards patience, vision, and proactive strategy. Section 5. Capital gains tax planning for real estate. Let's put it all together with some capital gains tax planning. Here are your current rates: 0%, 15%, or 20%, depending on your income. Add 3.8% net investment income tax if you're a high earner. Example scenario: you sell a $600,000 rental with a $300,000 gain. Option 1, pay $71,400 in tax and keep $228,600. Option 2, use 1031 exchange and defer it all. Option 3, combine cost segregation plus bonus depreciation on new property. Here are some advanced planning tips. Pair real estate strategies with other strategies, such as running S-Corp payroll to minimize self-employment taxes. Max out your retirement accounts, such as solo 401k. Health reimbursement arrangements. Don't leave money on the table. Taxes are often the single biggest expense in a real estate investor's life, but with the right strategy. Section 6. The power of entity structuring. How you hold your properties can dramatically affect your tax liability. Best practice for real estate investors. Use separate LLCs for each property to limit liability. Use an S-Corp or a management company for operations. Example: we helped a landlord restructure 6 properties into a layered entity setup. He saved over $28,000 annually and simplified accounting for loans and investors. Pro tip: avoid putting multiple properties under one Schedule E. It limits flexibility, legal protection, and tax strategy potential. Section 7. Real estate professional status. To use real estate losses to offset W-2 or active income, you must qualify as a real estate professional under IRS rules. 750 plus hours per year in real estate activities. More than half of your working time is in real estate. If you qualify, passive losses from cost segregation and bonus depreciation can offset ordinary income. Pro tip: track your hours carefully with a detailed log. At GavTax Advisory Services, we help real estate investors and business owners protect profits and grow faster with smart tax strategies. Book a free 15-minute consultation at gavtax.com.